Hey, what's going on, guys? Welcome to this video. Hope you guys are doing good today. This is Chris from Verillo Trading. All right, in this video, I didn't really have a title plan, so if the title is less clickbait, then that's good. Honestly, I just wanted to mention a few points that I think I need to improve on in my own trading. Leave a like on the video if you enjoyed this content, and let's get to it right now. Cool. So we're going to be watching some trades in the background here from earlier today. A couple of trades in the morning that I took, I guess, maybe slightly impulsively. I just wasn't really in the zone, I guess, right? So you see I got stopped. They ran right through me on that trade. Anyhow, no big deal. That's part of it. So the first point here on my list here is trading when not focused. Focus being the key word. I've realized that I'm less focused early in the morning on most days, on average here, especially going into a new week. If I've, had some drinks the previous day, generally speaking, I'm less focused early in the day. So I'm making myself aware of this so that I can be less aggressive when I am less focused. I can start to become better at self-assessing when I'm less focused on the tape and the market in general. And that's really the key. I just mentioned it right there. So if you're not focused, you need to be aware that you're not focused. And in order to know when you're focused, you need to know what it feels like to be focused. And obviously that takes some experience here. So for example, today I traded in the morning. I had limited success. Some traders I know had good trading sessions, probably because they were way more focused than I was. Right now you're looking at one trade that worked out, one out of many that didn't, but this one did for whatever reason. And obviously at this time it just stops me out on the other lot there. For example, today I came back in the afternoon just to take a look at what the market was doing, and for whatever reason I felt more focused. I was more patient. I wasn't seeking opportunity. That brings us to the next point here, and I find this a very interesting thing. Okay, so I believe that this is one thing that holds traders back and that makes them impulsive, is that they seek the opportunity rather than let the opportunity appear in front of them. Essentially, wait for the opportunity to become clear enough that you can trade it. Instead, a lot of time traders are in a state of seeking opportunity, right? You're looking at the markets, you're looking at a watch list. What's this doing? What's that doing? Where can I trade? Where do you think's a good price? What's the last level? What's the last rotation? What's this? What's that? You're seeking the opportunity instead of sitting back and letting it come into you. So this is something I want to work on more and more as the days go by. And in order to truly do this, I do believe you need to enjoy looking at the screen and waiting for it to pop out at you. And everybody views the market differently, so this might not even apply to you at all. Thinking about trading from a standpoint of letting the opportunity come to you rather than constantly being in a state of seeking for new opportunities. Because a lot of the times you're seeking opportunity that isn't even there. I made a post on Instagram that is relevant to trading. Here it is, I'll read it out loud. There's a nice picture, iPhone 12 camera. What you see when there's nothing in front of you, comma. When it's in front of you, you're thinking of something else. This is why you fail. Because you're trading the market and the idea you have in your head instead of trading the market that's in front of you. You're actively going in there and seeking for opportunity constantly. This contributes to the reason why you're over trading. Okay, this point here is related to scalping in the market that I trade in. It's pull more orders and understand that it's a natural part of the business. So a large part of my edge here is in selecting the right areas to do business, and how I determine if the market is giving me a good area to do business is often about how the market is approaching my area. If the market is approaching my area in a certain way, there is a high chance that I might have to pull that order, which means you have to give up on the opportunity or maybe wait a little longer for the market to give you a little bit more information. So pulling orders for my style of trading is something that has to be a part of the process, and you have to be completely okay with pulling out orders when the market is approaching you in a way that is not ideal. Okay, the next point here, point number 3, I wrote, pay attention to the participation and the overall movement of the market. Now this is important, it just relates to the market conditions, and again it ties into the being focused thing, right? So if I'm focused, this is what I'm focusing on. I'm focusing on the conditions of the market, where we're trading around. Are we trading somewhere relative to yesterday's range? Are we stuck in a range? what are the ranges like, how big are they, how many ticks is this market moving. Also, the time of day and the day of the week does make a difference. Now, early in the week on a Monday, there is a high probability that there's a lot of pros involved in the market. When you're trading a market where there's a lot of pros around, you gotta be aware of that. It might be a little bit harder to trade. Early morning on a Monday, you're probably gonna see some big boys throwing some size around. You might not have the best condition. Scalping requires good two-way rotations, in my opinion. And sometimes when these markets become too one-sided, honestly, it just becomes so hard. You just have to become a position trader or stay out, basically. So paying a lot of attention to the participation and the overall movement of the market. Okay, so that was a horrible trade. You just saw that right there. It filled me and then took me out on a stop on one lot, and then the other one, maybe I got a little lucky. I was trading very sloppy this morning. I was trading like a punter. I was just trying to hit on every opportunity that came my way, and it didn't work out well. So definitely today was one of those hard mornings for me, and that's trading for you guys. Unfortunately, you just got to go with that. This is something I actually got from looking at my trading results from the last 4 months straight. A lot of trading was done after 11 o'clock. By coincidence, a lot of money was actually lost during that time from 11 until about 1 p.m. And that's what I love about a software like Journalytix, is that it gives you a lot of very important details about your trading. Some of these details include how onside your trades are going, how offside your trades are going, how long you're spending in these trades. Of course, the time of day in which you tend to make money, the time of day where you tend to give back a lot of profits. What I noticed, I tend to give back profits between the hours of 11 a.m. to 1 p.m. the danger zone. So what I can get out of this info is that I definitely need to be less aggressive during this time of day. Take less trades. If I find I'm scratching 2 in a row, 3 in a row, I'm better off just stopping at that point, because it means that I'm over trading in that slower condition, and that's how you get chopped up. It happened to me last week on a good day. I ended up just chopping myself to infinity, over trading in a slower condition from 11 a.m. until about 1 p.m. And again, there are days where the market is very busy around 11 a.m., very busy even around noon. However, it's a very specific thing. You have to wait for the right setup. And that ties into, again, the first few points here, which is remaining focused, and instead of seeking the opportunity constantly, letting it appear in front of you. I keep repeating myself, but that's kind of what I need to do in order to get this in the noggin. The last thing in regards to the time of day here is avoid the last 30 minutes of trading always. And this is something I learned the hard way, to be honest. I mean, I've traded options for over a year, and even some days I remember having some contracts and just watching them expire worthless into the close on a Friday, for example. That's not really a great memory, I'll be honest with you, but it's something that I had to experience. I've tried scalping around the last 30 minutes, even the last hour on some days, and really the tape can be very bad. There's a lot of this chop between 2-3 points in NASDAQ. You'll get a very weird tape. Do yourself a favor, avoid the last 30 minutes. According to my results, 2 p.m. is fine, even 3 p.m. is fine, but the last 30 to 45 minutes, pretty dangerous. So that's what I'm going to leave you guys on here today. Just a few points I wanted to make note of, and I will catch you guys in the next video.